hedge fund and private equity. Hedge fund. So it'd be interesting one. So let's see. Okay, my question is to you guys. Have you heard, hedge fund name before this? Yes, no. You can try to answer in comment section if you have. If not, that's absolutely fine. I mean, I'll explain that to you. All right. So if I talk about, guys, hedge fund, note down somewhere. Hedge fund, it means it's a pool of investment or assets, I would say, where fund manager raise funds from the highly net worth individuals and institutions. See, we have discussed individuals, we have discussed, who would be the institutions or entities. We have discussed that, right, in details, because yesterday only we had a session around. But still, when we say institution, it means PF funds, provident funds, universities, trust, family funds, all those comes under the institutions category. An individual, it means the individual person like Junjunwala, Ambani, sport persons like MS Dhoni, Shikhar Dhawan, Virat Kohli, or all other the players who has the status of accredited and who have a capacity to invest funds in a hedge funds, because to invest in a hedge funds, minimum investment somewhere required around 1 crore or even maybe more than that. So if I talk about common people, their appetite or investing cap limit would be very low. Could be, let's say, 500,000, 200,000, 5,000, 10,000 max, right? But for a rich people, they would be easy to deploy 1 crore, 2 crore, 10 crore, 20 crores. So that depends, right? But yeah, so if I talk about, guys, fund, it means it's a pool of investments where the fund manager raise okay, we have missed lots of words. Funds from the highly net worth individuals and institutions or institutional investors, I would say. And see, fund manager would be like, again, highly professional, the traders like Ray Dalio. People would be such a means with highly advanced trading skills. Those people, basically, they registered themselves as a fund manager and registered even fund as well, right? But one thing, if I talk about highly professional traders who manage the fund and generate alpha from the investments. Okay, so this is the description which is, I think, required for what is, if anyone asks what do you know about hedge funds or what is hedge fund, so you should tell this. But now you may see question like, how would be the structure of hedge fund? Structure of hedge fund. So structure of hedge fund includes, guys, GP, LP, limited partners, Now your question would be, sir, who would be the GP and who would be the LP? See, we had a very long discussion around it yesterday, but still I'll explain it. GP in short would be, the fund managers. But it's not even, necessary that in every case, let's say GP would be the fund manager. GP, it could be, let's say, just as a general partner who arrange everything, means fundraising and all of this, or managing day-to-day operations of the fund. And GP and LP both can appoint fund manager as a third person or third entity who can manage the fund, right? And then they can pay the, let's say, incentive fees to the fund manager or management fees to the GP. So that's how basically you might say structure as well in place on the ground. So LP would be investors. So investors invest money. Okay. And both like GP, LP both come together and establish, the hedge fund. See, when GP and LP come together, both they sign, the LP agreement as well. So it means both sign LPA, limited partnership agreement, and that LPA define the terms and condition, how it would be. So everything basically would be discussed in, the details in the LP agreement, limited partnership agreement. And that partnership agreement which talks about, guys, two things. One is fee structure. So if I talk about in a hedge fund, you can see fee structure like management fees, and incentive fees. All right. So fee structure, which is like, the management fees and incentive fees. So management fees, the average industry fees somewhere would be like, 2% on AUM, asset under management, and incentive fees on profit earned. So incentive fees will be charged on earned profit. For example, let's say, in short, if I explain this term, investor invested 1,000 and current market price of investment is, let's say, 1,500. So you can charge incentive fees on like 500, because 500 which is the part of, let's say, unrealized profit. So you can charge, let's say, 20%, around 100 rupees that you can charge as an incentive fees to the fund. And if I talk about percentage of incentive fees, which is like, up to 20%, this is the average, the industry standard, I would say, where fund charge 20% the incentive fees to the investors on hedge fund, this structure. So this is how your hedge fund looks like. A fund, again, your fund manager and investors, they form LPA partnership structure. Also, include like fees, management fees, incentive fees, and there it could be other expenses as well, because see, since it is a fund structure, it means you can see lots of other expenses, which will be involved in this fund structure. Okay. So now if I talk about, let's say, the fund investment strategies. fund investment strategies. See, there are different strategies, guys. In a hedge fund, like you can see, short investment, short. So, what do you mean by short? Short is nothing but hedge funds make a profit through short sell. Hedge make a profit through short sell. Only means in the, let's say, market crash, hedge funds will sell the positions and make a profit out of it. So that strategy you can call it as a short. So apart from that, the intraday or the derivatives, the trading and all of that also comes under the short investment strategy. So main target would be, the hedge fund's main target would be to generate profit through short positions or short trades, not by long trades. So those funds you can call it as a short, the hedge fund strategy of investment would be short. Okay. Then other would be like long investment. So when we say long is nothing but, so hedge fund will hold investment for more than a year. It's like a normal buy and sell. As we know, at retail level, when we purchase securities, our intention would be to hold securities for 1 or 2 or 5, 10, right? So depends on the situation, right? So we hold the investment, correct? So we hold the investment because we want to gain the capital appreciation from the investment, and that's what we hold it, right? So the purpose of holding an investment would be to purchase equities, to purchase bonds, and hold in demat account of a funds for more than 1 year. So those funds you can call it as a long funds, or investment strategy would be long. So by taking long positions in the market, hedge funds will generate capital gain out of it, and as well as the income or dividends as well. So it depends on the strategy, how the hedge fund want to design the portfolio to generate consistent return out of it. All right. There could be a different strategy, like again event driven strategy. Event driven strategy. So when we say event driven, it means maybe, let's say, ahead of merger and acquisition or IPO or any the government policies. So hedge fund manager will quickly purchase the securities in the targeted company, and they'll hold it throughout that particular event, so hedge fund can make the good profit out of it. And this is common strategy where because hedge funds those would be like very flexible in terms of taking quick position and executing the trades, and yes, hedge fund manager do that as well. So that strategy you can call it as a event driven strategy, right? All right. And there could be many more as well, like the fixed income or crypto, commodity fund, then special like derivative fund, credit fund, See, on the basis of financial instruments, you can design the investment strategies and registered, the fund as a hedge fund, right? But yeah, these are the strategies. Now, your most important question would be, sir, if I want to understand, let's say, mutual fund and hedge fund together, because see, if you do the comparative analysis, then only you can understand. So, what is hedge fund or what is mutual fund? Mutual fund. See, mutual funds, which is for a retail people, right? But hedge funds, they are for HNIs, highly net worth individuals and institutions. Correct. So minimum investment with mutual fund would be like from 100 rupees. So you can invest. But here minimum investment which is required 1 crore. In a mutual fund you can see low risk. In a hedge fund you can see high risk. In a mutual fund, in terms of expenses, you can see low expenses, like only expense load. In a hedge fund, expenses would be like management fees, incentive fees, and other expenses which is required and that actually impact on net assets value of the fund. In terms of regulation, mutual funds are like highly regulated. Hedge funds, like in some of the country which are like unregulated, so it may, there is no any there is no dedicated regulatory body which can keep an eye on all the activities of hedge fund. So in India we don't have it, but in US and UK, in US has FINRA, and European Union have like ISMA, European Securities Regulatory Authority, who control everything. And even the in the UK you might see different regulation as well, like directive of alternative investment fund manager, like MiFID also that they have. So there are the key differences if you see in mutual fund and hedge fund. But in terms of, guys, return, if you ask me, the mutual fund delivers solid return, and hedge funds delivered average return. Right? But yeah, only the difference which you can see, the hedge funds which are primarily designed for the unregulated activities, as well as the investments where the rich people or institutions who can contribute fund for an investment purpose. So that's how you can do like hand in hand analysis of hedge fund and private equity and try to understand it. Right? See, one common thing which you can see from the operating perspective is both the funds need NAV, net assets value. So NAV is nothing but, so it's total assets minus, sorry, NAV like total assets. When we say total assets, which includes investments, receivable, prepaid, and cash equivalent, that all comes under assets. All right. Total liabilities also, we need it. So that will be basically deducted. Total liabilities would be like payable of fees plus outstanding payments, excess payment returned, that all comes under basically total liabilities. And at the end you can divide with total outstanding shares. Okay. So let's take an example to understand this. Let's say fund has investment in A stocks, B stocks, C stocks, and even D bonds, dividend, so total assets So now if we just calculate the total asset, should be around somewhere 500, right? Total gross assets 500. Okay. Now if the fund has any liabilities, let's assume it. Liability is like payable, then it could be, let's say, admin fees payable, right? Let's say 200, which is the liability of fund. So you can calculate the net assets. Again, this should be like gross assets only, because in a fund, like, we calculate different things. So 500 minus 200 would be 300. So 300 you can treat as assets. Right. And let's say hedge fund has units of 100. So if I now calculate the NAV for per units, we have units, we have everything, so we'll calculate NAV for per share. 300 divided with 100 units, so per share value, how much? 3 rupees for per share. So this should be the NAV for per share. So this is how, guys, NAV we calculate, in hedge fund. And this NAV will be, let's say, allocated to the investor's account on a day-to-day basis. But yeah, there could be two types of hedge funds. One is like open-ended fund, and another one is like close-ended fund. So in case of close-ended funds, fund will be closed for maybe 5 years, 2 years, 3 years, 4 years. So what it means, fund will not accept any further SIPs or investments kind of from the any investors under the same name. So those funds you can call it as a hedge funds. If I talk closed-end hedge funds, and if I talk about, let's say, if I talk about the funds, like every month, let's say fund is raising investments from the investors. So every month, let's say if the fund has different the closings, so those funds you can call it as open-ended. See, in a close-ended hedge funds, you always see the restrictions, like the investors, they cannot come, and they cannot even go out on their own, so they'll have to wait in the fund for a certain period, then only they can take an exit from the investment. But if I talk about open-ended funds, the investors in open-ended funds, they can take an exit at any point in time. They can even join the funds at any point in time. The reason is open-ended funds, they allow that flexibility to enter or to even buy and sell the units in the funds on time to time, depends on the market situation and all. So this is how you can differentiate close-ended funds and open-ended funds. But apart from that, if anyone asks question to you, hey, do you know how NAV calculate, how does it work, so you should tell them. So to compute the NAV, what we need total expenses, total income, total assets, total liabilities, so that we can update the funds book and produce net assets value of the fund. So this is how you should answer, guys. Okay. Yes, no. So this was all about the hedge fund. So in short, now if you ask me, tell us the structure kind of mutual fund, how it looks like. See, if I talk about the mutual fund, you can see the same structure in a hedge fund, except the trust, because in a mutual fund there was trust, but in a hedge fund, instead of trust there would be LPA. Yeah, limited partnership. So same structure, structure remains the same for a hedge fund. Only the difference which you can see in fees and different structures as well, like for a tax purposes, So that flexibility you can see under hedge funds. If you see in this structure, like the investors A, B, C, and D, they have invested money, in different schemes like tech, small cap fund, banking fund, multi small cap fund. See, you can see the similar, kind of the nature of investments with a mutual fund also. The reason is mutual funds and hedge funds both looks like same, but on a technical background. So there are key differences which I already discussed about. Like in a hedge fund, you can see GPLP structure, but in a mutual fund you can see trust. It would be like trust, not GPLP. In a hedge fund, like mutual fund, hedge fund manager, you know, uh, most of the hedge fund manager would be like active traders, so who will have like hands-on training experience or trading experience, and that's what they invest money in, you know different asset classes and generate return for investors. All right. So I hope you get it. I mean, how structure looks like for a hedge fund also. So it's very simple. I mean, see, even hedge fund. See, if I talk about hedge fund deals in every segment. Like derivatives, actively invest in derivatives. Hedge funds also trades through trading of the short term trades, like short sale or intraday trades and all of that. Like basically hedge fund manager, they do the detailed analysis of like quantitative analysis or qualitative analysis of the market, and accordingly design the strategies to generate return on investment. And the popular name of hedge funds, if you ask me, like the Bridgewater or BlackRock. These are the Millennium, Pimco Group, even Goldman Sachs. These are the the big hedge funds in the industry, and there are thousands of other, like more than 5,000 the hedge funds which are registered in a different jurisdictions. But most of the hedge funds which are registered in Cayman Island because of tax benefits. All right. So this is how you can see the structure of hedge fund. So just let me know if you have any questions around the hedge funds. If not, just text me. Not if you don't have any questions, so just text me. So I'll explain the further part. No questions, guys?